Are you prepared for the biggest financial shakeup of our time? In Gold Wars, the Financial Endgame, Willem Middelkoop unveils the hidden battles over gold and the impending financial crisis that could reshape the global economy. If you think your money is safe, think again. Europe, in particular, faces unprecedented challenges that could impact everyone. Stick around, because missing this could mean being unprepared for the financial storm ahead. Our journey begins with an understanding of gold's deep-seated role in the global financial system. Gold has always been more than just a metal. It has been a symbol of wealth, power, and stability. Middelkoop takes us back to ancient Egypt, where gold was revered not just for its beauty, but as a divine metal, symbolizing eternity and power. This reverence continued through history, from the Roman Empire to the medieval European kingdoms, where gold was used to mint coins and symbolize sovereign power. In ancient Egypt, gold was associated with the gods, particularly the sun god Ra, reflecting its perceived immortality and purity. It was used in everything from jewelry and religious artifacts to the famous burial masks of pharaohs, such as the iconic mask of Tutankhamun. The Romans expanded on this reverence, using gold coins to facilitate trade across their vast empire, solidifying its status as a universal symbol of wealth. During the medieval period in Europe, gold became central to the economy. Kings and queens hoarded gold, and it was often the spoils of war. The invention of the gold florin in Florence and the ducat in Venice marked the beginning of standardized currency systems that would become critical in the development of modern finance. The possession and control of gold equated to power and stability, laying the groundwork for its critical role in the financial systems that would follow. The devastation of World War II led to the establishment of the Bretton Woods system in 1944. Representatives from 44 nations convened to create a new financial order aimed at fostering global economic stability and preventing another Great Depression. The system pegged international currencies to the US dollar, which was convertible to gold at a fixed rate of $35 per ounce. This made the US dollar the world's primary reserve currency. The Bretton Woods Conference marked a significant turning point in global economic policy. Held at the Mount Washington Hotel in New Hampshire, the conference aimed to ensure post-war economic stability and prevent the competitive devaluations and protectionist policies that had plagued the interwar period. Key institutions such as the International Monetary Fund, IMF, and the World Bank were established to oversee the new financial order. However, this system had inherent flaws. It placed immense pressure on the U.S. to maintain gold reserves sufficient to back its currency, a task that became increasingly difficult as global trade expanded. As European economies recovered and trade imbalances grew, other nations began to doubt the U.S.'s ability to uphold the gold standard. This lack of confidence was exacerbated by the U.S.'s increasing military expenditures and domestic economic policies, leading to a series of events that would culminate in a significant financial shift. On August 15, 1971, President Richard Nixon announced the suspension of the dollar's convertibility into gold, effectively ending the Bretton Woods system. This move, known as the Nixon shock, transitioned the world to a fiat currency system where money's value is not tied to physical commodities, but rather to government decree. The Nixon shock was driven by multiple factors. The U.S. was facing a balance of payments deficit, and foreign nations, notably France, were increasingly demanding gold in exchange for their dollars. Nixon's decision to close the gold window was intended to prevent a run on the U.S. gold reserves and stabilize the economy. However, the immediate effect was profound. The dollar was devalued, and the fixed exchange rate system was replaced by floating rates, where currency values were determined by market forces. The shift to fiat currency allowed for greater flexibility in monetary policy, enabling governments to print money to address economic issues. However, it also opened the door to inflation and economic instability. Without the discipline imposed by gold backing, currencies could be devalued, leading to loss of purchasing power and savings for ordinary people. This period saw significant inflationary pressures, particularly in the 1970s, as oil prices soared and economic growth stagnated. Today, gold remains a critical asset in the global financial system, but its price and market are subject to manipulation by central banks and financial institutions. Middelkoop explains how central banks use gold to stabilize economies, manage inflation, and influence global markets. Through mechanisms such as gold leasing and derivatives trading, these institutions can control gold prices, often keeping them artificially low to maintain confidence in fiat currencies. Gold manipulation occurs through various channels. Central banks can engage in gold leasing, where they lend out their gold reserves to financial institutions, which then sell the gold on the market. This increases the supply of gold and suppresses its price. Additionally, the use of derivatives, such as futures contracts, allows traders to speculate on gold prices without owning the physical metal, further influencing market dynamics. Middelkoop provides historical evidence and insider accounts to reveal how these manipulations occur. For instance, during the 1990s, central banks engaged in large-scale gold leasing to suppress prices, a strategy aimed at bolstering the perceived stability of fiat currencies. This manipulation is not just a recent phenomenon, but has historical precedents, demonstrating the enduring importance of gold in global finance. Middelkoop warns that the current economic system, characterized by excessive debt and artificial stability, is unsustainable. The relentless printing of money, especially in the wake of the 2008 financial crisis and the COVID-19 pandemic, has inflated asset bubbles and increased economic inequality. This situation is particularly dire in Europe, where sovereign debt crises and banking vulnerabilities pose significant risks. The 2008 financial crisis exposed significant weaknesses in the global financial system. Governments and central banks responded with unprecedented monetary interventions, including lowering interest rates to near zero and implementing quantitative easing (QE) programs. These measures provided short-term stability, but also led to long-term consequences, including inflated asset prices and increased public and private debt. The COVID-19 pandemic further exacerbated these issues. Governments worldwide engaged in massive fiscal stimulus programs to support their economies, funded largely through increased borrowing. Central banks expanded their QE programs, injecting trillions of dollars into financial markets. While these measures were necessary to prevent economic collapse, they also contributed to growing debt levels and potential future inflationary pressures. In Europe, the situation is particularly precarious. Several countries, such as Greece, Italy, and Spain, face high levels of public debt and struggling economies. The European Central Bank, ECB, has been forced to maintain ultra-loose monetary policies to support these economies, but this approach is not sustainable in the long run. Middelkoop predicts a massive economic collapse driven by the devaluation of fiat currencies and loss of confidence in the financial system. In the financial endgame, as Middelkoop calls it, gold will re-emerge as a pivotal asset. He predicts a significant revaluation of gold, driven by the collapse of fiat currencies and the ensuing scramble for stable stores of value. This revaluation will lead to significant shifts in global wealth and power. Countries that have accumulated gold reserves, like China and Russia, will gain economic influence, while those heavily reliant on fiat currencies will face severe economic disruptions. China and Russia have been actively increasing their gold reserves over the past decade, positioning themselves for a potential shift in the global financial order. By contrast, Western nations, particularly those in Europe, have been slower to recognize the strategic importance of gold. Middelkoop suggests that individuals and nations should prepare by diversifying their assets and increasing their holdings in physical gold and other tangible assets. He argues that gold will play a central role in the post-fiat currency world, serving as a stable and reliable store of value. As fiat currencies lose their value and trust in the financial system erodes, gold will become increasingly important in preserving wealth. Middelkoop offers practical advice for individuals and institutions to navigate the impending financial crisis. 1. Diversify assets. Don't rely solely on fiat currencies. Invest in a mix of assets including physical gold, silver, real estate, and other commodities. Diversification can protect against the devaluation of any single asset class and provide stability in times of economic uncertainty. 2. Hold physical gold. Paper gold, such as ETFs, may not provide the same security as physical gold in times of crisis. Ensure a portion of your investment is intangible, physical gold stored in secure locations. Physical gold is less susceptible to market manipulation and provides a hedge against financial system collapse. 3. Stay informed. Keep abreast of economic developments and central bank policies. Understanding the macroeconomic landscape can help you make informed investment decisions. Regularly review financial news, economic reports, and central bank statements to stay ahead of potential risks. 4. Reduce debt. In an unstable economic environment, high levels of personal or institutional debt can be disastrous. Aim to reduce debt and increase liquidity. Reducing debt levels can provide greater financial flexibility and reduce vulnerability to interest rate increases or economic downturns. 5. Invest in tangible assets. Beyond precious metals, consider investments in real estate, agricultural land, and other tangible assets that retain value. Tangible assets provide a hedge against inflation and can generate income or provide essential resources in times of crisis. Willem Middelkoop's Gold Wars: The Financial Endgame isn't just a book, it's a wake-up call. It reveals the hidden struggles over gold and prepares us for a financial upheaval that could change everything we know about money. Europe and the world are on the brink of a significant financial transformation, and understanding these dynamics is crucial for safeguarding your financial future. Don't let yourself be caught off guard. Dive into Middelkoop's Gold Wars and arm yourself with the insights needed to navigate the financial endgame. Subscribe to our channel for more in-depth analyses and stay ahead of the curve. Your financial future depends on it. You're set.